Today we're going to talk about some basics for the home equity conversion mortgage known as the reverse mortgage. The HECM was created in 1988 by the United States Federal Housing Administration and AARP. The first loan ever was created in 1989. The reason for the program was to give an elder, 62 years and older, a way to convert the equity from their property into an income stream. That income stream can be withdrawn in one lump sum, it can be taken on a monthly basis like a payment, or it can be withdrawn over a set amount of time. The loan does not require repayments on a monthly basis. It is considered a non-recourse loan, which basically means no matter how upside down you might be, value of the property versus what is owed, the bank cannot come after you, your surviving spouse, or an heir, no matter what. It is basically forgiven. A misconception is that the government owns your home once you enter into contract of a reverse mortgage. That could not be further from the truth. This is an FHA loan. It's guaranteed by the United States, by our government. As long as you occupy the property, pay your property taxes and homeowners insurance, perhaps flood insurance and homeowners association dues, no one can ever remove the home from you. You own it 100%. Matter of fact, you can sell it, refinance it. It's your home. Basically, it really is no different than any other type of loan program that's out there, with the one big difference. You can defer your payment without receiving a foreclosure notice. If I was to not make my payment, wouldn't be a good thing. Just make sure, no matter if you own your home outright or if you have a mortgage against your house, you got to make your property tax payment. If you don't, the local government will come get your house. It has nothing to do with the loan you have. The next thing I like to speak about is the basic qualifications. If you are 62 years of age, if you are a United States resident, and you occupy the property, you basically qualify. I know it sounds very easy, but it is basically that easy. The entire loan program is based on an equity position. You either have a home now with equity that simply gets converted, or you can use the program to purchase a home, which requires a large down payment. Keep in mind, you always have to occupy the property. Pay your property taxes and insurance. That is the key. Let's talk about the two layers of protection on all reverse mortgages. The first one is HUD counseling. This is a step that precedes closing on any reverse mortgage. The borrower and his or her spouse must meet either by phone or in person with a HUD counselor. This is a government commissioned officer who makes sure that you fully understand the program, that you are there willingly, and that you're not being coerced or manipulated into the program. I've been doing reverse mortgages since 2005, and I can tell you I've seen a lot of coercion. It happens a lot, especially from family. So this step is put in place way before you can even close on a loan. The second layer of protection is known as the non-recourse clause. It's an insurance policy that basically protects you, your surviving spouse, and your heirs. Let me make an example for you. You are now entered into a reverse mortgage and you are enjoying the payment deferrals, perhaps money sitting in this line of credit, the savings account, which is growing for you. And as you are deferring those mortgage payments, your principal reversely amortizes. It goes up. Let's say you and your spouse pass away, and your heir is sitting there with open hands. Let's hypothetically say that you were able to defer a payment for 30 years. And now the principal balance of your mortgage has exceeded what the home is worth. That would be a sad situation to leave to your heirs. The non-recourse clause kicks in. It basically protects the heir from any negative equity or an amount that is not collected by the lender from being collected by your heirs. In other words, the bank has no recourse to collect any shortage from a surviving spouse or the heir. Here is the golden piece to all this. But you still have a right to the property. It is your property. You own it 100%. And when you pass away and you've executed a will, your heir is now the owner potentially of the home. The heir has many, many benefits. The heir can decide to purchase the home at the value of the property, not what's owed. I want you to think about that for just a minute. Please call me on this topic. This is very, very important, and it is very often completely misunderstood. It's what gives people a lot of pause when looking into the reverse mortgage. Let me help you with the facts. The next part I'd like to talk about is what sort of property actually qualifies for a reverse mortgage. Once again, a lot of misconceptions, so it's very important you call me. Think about it like this. The rule is you have to occupy the property. So typically people think a single family resident is the one property a person can buy. But that's not necessarily true. You're also eligible to purchase a duplex, a threeplex, or a fourplex. As long as you occupy one of those units, you can actually use the rent income from the other units to increase your income even more. This may be a little strategic, so let's talk about that and give me a call. Real estate agents and builders, this is a feature we really need to talk about. There's great opportunity to help a lot of people. There is a lot of misinformation about the reverse mortgage out there, and it drives me crazy because there's so much missed opportunity to help so many people. I do a lot of different loan programs, but the reverse mortgage is my specialty. I'm an expert at it. Please give me a call. I look forward to talking with you.